Imagine waking up to an earth-shattering headline. For the first time in the history of digital assets, Bitcoin is no longer the undisputed king of crypto. For over 1.5 decades, Bitcoin has not only shaped the cryptocurrency landscape, but has also been the beating heart of a global movement. Its mysterious origins, legendary price surges, and iconic status have given it an almost mythical aura. Yet now, a seismic shift is underway, rattling the very foundation of the market and raising urgent questions for investors, traders, and technology enthusiasts alike. Could this be the dawn of a new era, or a dire warning for those still clinging to the old guard? Buckle up, because the crypto roller coaster is entering uncharted territory, and you do not want to miss what comes next. Let us rewind just a moment. Over the past several years, Bitcoin's dominance has seemed nearly unassailable. Its price journey, from mere cents to unimaginable heights, has captivated everyone from online hobbyists to Wall Street titans. In May of the year 2025, Bitcoin soared to an all-time high of $111,970 United States dollars. That staggering figure sent shockwaves through financial markets, with analysts, institutional investors, and retail traders all scrambling to make sense of the relentless momentum. The world watched as Bitcoin's market capitalization swelled to previously unthinkable levels, and it appeared that no other digital asset could possibly challenge its throne. But beneath the surface, a quiet revolution was brewing. Altcoins, those alternative cryptocurrencies that live outside of Bitcoin's towering shadow, were steadily gaining traction. Fast forward to today. The global cryptocurrency market capitalization now stands at roughly $3.420 trillion United States dollars, and altcoins command a record-breaking 40% share of that colossal sum. This represents the highest proportion of global market cap altcoins have ever held, a signal that the sands of power are shifting before our very eyes. Take Ethereum, for example. Once merely known as the number 2 coin, Ethereum has become a juggernaut in its own right. With its smart contract functionality, Ethereum laid the groundwork for decentralized finance, DeFi, non-fungible tokens, and a whole new ecosystem of blockchain innovation. Today, Ethereum's market capitalization is measured in the hundreds of billions, rivaling the largest tech companies on the planet. Its influence extends far beyond currency speculation. It is the very infrastructure powering the next generation of digital applications. Then there are the rising stars. Solana, BNB, Binance Coin, and a host of others are carving out distinctive niches. Solana has dazzled developers with lightning-fast transaction speeds and ultra-low fees, making it a favorite for decentralized applications and NFT marketplaces. BNB, originally a utility token for the Binance exchange, has evolved into an ecosystem powerhouse, supporting everything from decentralized exchanges to blockchain gaming. Even meme coins like Dogecoin, once dismissed as little more than internet jokes, now command enormous market capitalizations and have inspired communities that rival some of the world's most dedicated fandoms. This past week, the landscape shifted yet again. Bitcoin slipped by 0.5% over the past 24 hours, signaling a cooling of the relentless buying momentum that had characterized much of the past year. Ethereum followed suit, dropping by 0.7%. Dogecoin experienced the sharpest drop among the major assets, tumbling by more than 2% in a single day and nearly 3% over the past 7 days, reflecting waning enthusiasm after its recent rallies. Meanwhile, a new wave of activity swept across the altcoin universe. XRP, the digital asset closely tied to payment and settlement applications, surged by 1.6% in just one day. Tron, a blockchain platform known for its high throughput and decentralized content sharing, gained 0.6%. But the real fireworks were seen among the so-called lower-ranked or low-cap tokens. Hashflow, for instance, exploded by over 104% in a single day, powered by trading volumes that exceeded 548 million United States dollars. TNQ and GameBuild, two lesser-known but fast-growing projects, each surged by more than 20%. Maverick Protocol, World Friendship Cash, and Osaka Protocol all posted gains above 20%, underscoring the speculative fervor gripping the market. So what is fueling this sudden hunger for risk? Experts point to the classic rotation phenomenon. As large-cap assets like Bitcoin and Ethereum lose steam, traders and speculators flock to smaller, riskier tokens in search of outsized returns. Michael Van de Poppy, a respected crypto strategist, put it succinctly: Altcoins are primed for a new rally. The market is hungry for volatility. His words reflect a growing sentiment that the days of easy gains from the big names might be waning, and that the next fortune could be made among the up-and-comers. Institutional investors are watching these developments with laser focus. According to Bloomberg analysts, there is as much as a 95% chance that altcoin exchange-traded funds, ETFs, could receive approval by the second half of 2025. If that happens, it could unleash a tidal wave of institutional capital into non-Bitcoin assets, fundamentally altering the competitive landscape. Some analysts estimate that billions in new money could flow into altcoins almost overnight, diversifying risk across the market and supercharging innovation across sectors as diverse as decentralized finance, blockchain gaming, supply chain logistics, and digital identity. But this rotation into riskier plays is not without danger. The world of cryptocurrency has always been defined by its volatility, but the past week's frenzy feels different, a kind of Wild West exuberance where fortunes are made and lost in the blink of an eye. Joel Kruger from LMAX Group, a seasoned market observer, cautions that July has historically been strong for crypto, but this time the stakes are higher. With institutional adoption on the horizon, regulatory scrutiny intensifying, and new technologies reshaping the playing field, the risks and rewards have never been greater. Let us pause and consider the broader implications. Is this just another speculative wave destined to crash, or are we witnessing a permanent transformation in how the world invests in digital assets? The answer is complex and depends on several evolving factors: regulation, technology, macroeconomics, and of course, human nature. Regulation remains the great unknown. In recent months, agencies in both Europe and the United States have signaled a willingness to ramp up oversight of the crypto sector. The European Union is pushing forward with its Markets in Crypto Assets (MiCA) regulation, aiming to bring clarity and stability to the rapidly evolving market. In the United States, the Securities and Exchange Commission and other agencies continue to debate the classification of digital assets, raising the possibility of stricter rules or outright crackdowns if speculative excess spirals out of control. Should regulation arrive faster or more forcefully than expected, it could chill investor enthusiasm overnight, transforming today's exuberance into tomorrow's cautionary tale. Yet regulatory clarity could also unlock new opportunities. If altcoin ETFs are approved, it would mark a watershed moment, opening the doors for pension funds, insurance companies, and other large players to enter the space with confidence. According to Bloomberg's latest analysis, the probability of altcoin ETF approval stands at an astonishing 90 to 95% by the second half of 2025. Such a move would not only legitimize the altcoin sector, but also unleash billions in fresh institutional capital, accelerating the pace of innovation and driving the next cycle of growth. Technological innovation is another game changer. The integration of artificial intelligence with blockchain technology is already yielding breakthroughs in automated trading, fraud detection, and smart contract optimization. Decentralized finance, DeFi, continues to expand rapidly, offering everything from lending and borrowing to decentralized exchanges and yield farming. Non-fungible tokens, or NFTs, have burst onto the scene, revolutionizing the worlds of art, gaming, and digital collectibles. Cross-chain interoperability, which allows assets and data to move seamlessly between different blockchains, promises to break down the barriers that have fragmented the crypto ecosystem for years. Consider the explosion of DeFi protocols. In the past 12 months alone, the total value locked in DeFi platforms has surged to new highs, with Ethereum, Solana, and BNB Smart Chain leading the charge. New protocols like Maverick and GameBuild are experimenting with innovative models for governance, tokenomics, and community engagement. Meanwhile, AI-driven platforms are making it easier for traders to analyze market sentiment, identify arbitrage opportunities, and automate sophisticated strategies that were once the exclusive domain of hedge funds. The rise of NFTs has also been nothing short of meteoric. Just a few years ago, the idea of spending millions of dollars on a digital artwork or in-game asset seemed absurd. Today, NFT marketplaces record billions in annual trading volume, and major brands, from luxury fashion houses to global sports leagues, are launching their own tokens and experiences. This convergence of technology, culture, and finance is ushering in an era where digital ownership is as real and valuable as physical property. But with opportunity comes uncertainty. The explosive gains seen in tokens like Hashflow, a more than 100% jump in a single day, illustrate the high-stakes, high-reward nature of the current market. These wild swings may attract new participants, but they also expose investors to the risk of sudden and painful corrections. As traders pile into low-cap tokens in search of the next big thing, the potential for pump-and-dump schemes, rug pulls, and market manipulation rises sharply. Regulatory watchdogs are acutely aware of these dangers, and the specter of enforcement actions looms large. So, what does this all mean for everyday investors? First and foremost, recognize that the cryptocurrency landscape is fundamentally changing. Diversification is more important than ever, not just between Bitcoin and Ethereum, but across carefully selected altcoins with strong fundamentals and real-world use cases. Do your homework. Evaluate projects based on the strength of their development teams, the transparency of their roadmaps, and the clarity of their value propositions. Ask yourself whether a given coin solves a real problem or if it is simply riding a wave of hype. Keep a close eye on regulatory developments. The approval of an altcoin ETF or the introduction of new legislation can shift the entire market in a matter of hours. In 2023, for example, the mere rumor of a Bitcoin ETF sent prices soaring across the board. Imagine the impact if a basket of altcoins were to receive similar institutional backing. Conversely, the announcement of stricter rules or enforcement actions can trigger sudden sell-offs and erode confidence. Most importantly, remember the golden rule of investing. High reward always comes with high risk. The crypto world rewards those who stay informed, remain agile, and never invest more than they can afford to lose. If the market turns, the ability to adapt and cut losses, or to spot the next real trend before the crowd, will matter far more than luck or bravado. Legendary investors like Warren Buffett and Ray Dalio have long preached the importance of risk management, and their wisdom is just as relevant in the digital age. Is this shift toward altcoins a lasting transformation, or just another speculative bubble destined to burst? The answer, as always, is complicated. The digital asset ecosystem is maturing, with regulation on the horizon, institutions gearing up for large-scale participation, and technology evolving at breakneck speed. Yet, human nature remains unchanged. Fear of missing out, greed, and speculation will always be part of the equation. Behind the headlines and the hype, the numbers tell the real story. More than 40% of the global crypto market capitalization now belongs to altcoins, a historic high and a powerful signal that the balance of power is shifting. The altcoin market cap itself has jumped by over 4% in just the past week, while new projects and protocols are attracting unprecedented levels of developer activity and venture capital investment. Consider the rapid expansion of Europe's crypto market, which is projected to reach 18.45 billion United States dollars by the year 2030. Or the global forecast. Industry analysts estimate that the worldwide crypto market could hit 1.9 billion United States dollars by 2028. These figures underscore the enormous potential that still lies ahead, and the fierce competition that will determine which projects rise and which fall. Looking back, we can draw lessons from previous market cycles. In 2017, the first major altcoin boom captured the world's attention, but it was followed by a brutal crash that wiped out billions in value. Yet, out of that chaos emerged the foundations for today's DeFi and NFT revolutions. Every wave of speculation brings both short-term pain and long-term progress, pushing the industry closer to mainstream adoption and genuine utility. This time, however, several factors set the stage for a more sustainable transformation. The entry of institutional capital, the professionalization of trading infrastructure, and the maturation of regulatory frameworks all point to a future where digital assets are not just speculative instruments, but integral components of the global financial system. The convergence of blockchain with artificial intelligence, the Internet of Things, and next-generation cryptography is opening new frontiers in data security, smart contracts, and digital identity. Yet, challenges remain. The threat of cyber attacks, the risk of protocol failures, and the ongoing battle over privacy versus compliance are constant reminders that the path forward is anything but smooth. The crypto community must balance the drive for innovation with the need for strong ethics, robust governance, and transparent leadership, a lesson echoed by blockchain pioneers like Arthur Brito, who stresses the importance of trust, interoperability, and responsible stewardship. For individual investors, the message is clear. Stay informed, stay cautious, and stay curious. Follow the news, join communities, and learn from both successes and failures. If you are new to crypto, start small. avoid leverage, and build your knowledge before committing significant capital. If you are a veteran, keep challenging your assumptions and be willing to adapt as the landscape evolves. So, here's the bottom line. The shift toward altcoins is both a warning and an opportunity. It signals a maturing market, a changing of the guard, and a new era of innovation. But it also carries the risk of excess, speculation, and painful corrections. The winners will be those who can separate real value from empty promises, who can ride the waves of volatility without losing sight of the long-term vision. If you want to stay ahead of the next trend, whether it is the rise of a new altcoin, the approval of a groundbreaking ETF, or the integration of AI and blockchain, make sure to subscribe, hit the notification bell, and share your thoughts in the comments. What altcoin are you watching next? Do you think this is the new normal, or just another chapter in the never-ending crypto roller coaster? Your voice could spark our next deep dive investigation. Thank you for joining us on this journey through the future of digital assets.